Remember in April when they said it was going to be the worst April since, 1801 or something like that, and we were all going to be broke and the country was going to be destroyed within a week or something like that? Well, the fear mongers were wrong again. Yeah, I'm sitting here going through the prices and the markets. They all look pretty good, but I need an expert eye on it. That's why Nick Hopwood is here, certified financial planner, founder of Peak Wealth. He joined me. Nick, nice to have you here on the program. By the way, at any time, we're going to put up a QR code here on the screen so you can see what's going on. Nick, welcome back to the show.
Good morning, Steve. How are you today?
I'm good. There's that QR code. If you ever want to get Nick's advice on anything, you just click on that QR code with your phone. All right, so we're halfway through the year. I'm looking at, the Dow broke 44,000 yesterday. The Nasdaq also up significantly. The S&P 500 over 6,200. I mean, these are all really good numbers. In April, they were preaching doom and gloom. Look, most of these tariffs are still in place, a good number of them. It's bringing in billions of dollars to the United States. It has not created inflation. It has not created all this doom and gloom that we were told. We're halfway through the fiscal year. Tell me about where we stand.
Yeah, Steve, consider this our halftime report. Here we are on July 1st, and the markets, we had some turbulent times, but at this point, the S&P, the Nasdaq, they're over 5% to the positive. Dow's up 3%. International is up 20%. Emerging markets up 16%. And fixed income is doing pretty nice at plus 3.5% for the first half. So overall, it's been great. The only black eye are small caps, which are down 2% on a year-to-date basis.
And what's a small cap? Tell the folks, just so anybody who doesn't know what you're talking about.
So generally, when we think about the stock market, we're thinking about the blue chips, like Apple and Amazon and those types of companies. The small caps are the smaller companies under $10 billion in market cap. So ones you don't hear about on a daily basis.
Yeah, there's your chart for the halftime report, by the way, giving a lot of green, a little bit of red, not too much. Go ahead.
Yeah, Steve, this is an interesting chart because like you were mentioning, through April 7th, we were down more than 7% on a year-to-date basis. And now by June 30th, we've rallied back to be positive. And this chart shows the last several times that's happened. And because it's such a nice snapback by June 30th, it gives you momentum going into the second half of the year. And in years that this has happened, the second half of the year has averaged plus 5%, which would put us, for the year at 10%, which is a nice year. But the caveat is if we don't have a recession, then the second half of the year in these circumstances have paid 11% for the back half of the year, which then would put us at about 16% for the calendar year. So this is just, historical data. It doesn't mean this is what's going to happen, but it's interesting to look back and look at this.
One of the things that happened, briefly there, we saw a spike in oil prices, but they came right back down. They're right in the mid-60s again. Gas prices continue to fall. We're cheaper by 35 cents than we were a year ago. We're down a couple of cents from yesterday. We're down from a week ago. These indicators for me, as an average American driving around living this life, things look pretty good. Inflation seems pretty tame to me. Things seem to have settled down. Despite all the doom and gloom preaching, I don't see it. All right, so all-time market highs. April was 20%, 21%. April low to now plus 28%, right? That's a remarkable number that you just said.
Yeah, so on April 7th, Trump tweeted, now would be a great time to buy stocks, after we had a 21% drop. And so there you have the chart. It was a nasty drop, 21%, is bear market territory. But after the Trump tweet, after the pause on tariffs, we've had a 28% rebound. So it goes to show you shouldn't be panicky market we have, and it would be unfortunate to miss out on a 28% snapback.
That's for sure. It's pretty remarkable. All right, so years we were down 7% or more at some point, and then rallied back to be positive by June 30th with no recession. The back half of the year historically averaged 11%, right? That's remarkable numbers. In all cases, including the recession years, the back half would average 5%. We have a pretty good year in front of it, especially what would happen if they lowered interest rates at the Fed at this point, Nick?
Yeah, right now the market is expecting 2 Fed rate cuts for the back half of the year and then 2 more rate cuts next year. So, that would be just adding fuel to the fire. The market loves it. It's like the drug for the market to have lower rates. but also, general financing. If fixed income rates drop across the board, which many would expect after a Fed cut, we can see lower rates on mortgages, car loans, et cetera, and really, help jumpstart the economy there as well.
Yeah, so you feel pretty good about it then, right? You feel pretty good about where we are and where we're going from here.
I do feel pretty good. What worries me is the market valuation. We're very richly valued. It can continue to be stretched on valuations for years, but I started in the business in '99 when we had the Nasdaq bubble, and I'll never forget that. We're not at those levels right now, but we are certainly stretched a little bit. You can only stretch that rubber band so far before it snaps.
Right. So the first year in is you got swatted by the bubble. First year in business. That was quite a learning experience, Nick. Yeah, that's great. Welcome to the party, pal. Slap. I mean, really? Yeah.
Yeah, and then Steve, right into 2008. So there was this period from 2000 to 2010, basically my first 10 years in the industry, where the markets were flat. The lost decade.
Well, but now you've brought your magic, right? We're not flat anymore. My concern is inflation, of course, which is devaluing the dollar. That's my big concern going forward. Anyhow, put that QR code up again if you would, folks. I want people to know how they can get a hold of Nick Hopwood. There it is. PeakWM.com as well, PeakWM.com, or you can click on that QR code. Get a second opinion. Nick told us when the market was down, don't panic. Don't need any panicking around here. None of that. Nick, always nice to see you. Good work here, by the way. I feel positive, too. I feel positive.
Thank you, Steve. Have a great day.
You too, my friend. There you have it. Nick Hopwood, Peak Wealth. Good stuff. Yeah. Worst year since 1912 or something. Stop it. All right, we'll be back in a moment. It's the Steve Gruber Show. Glad you're here for the conversation.